and welcome to another edition of The Journey. Well, this is a Keith and Jared episode, and we're going to talk about the big, beautiful tax bill, and we're going to try not to involve politics whatsoever. Really just want to talk about a few of the things that are probably impacting some of you so that you're aware of it and can make any changes accordingly. The first thing on the big, beautiful tax bill that we need to know is marginal rates stayed the same. In 2017, there was a tax bill that was passed. It lowered the marginal rates. Those rates were set to sunset at the end of 2025, and they have just basically continued those marginal rates for the next few years. So that will stay the same. The other things that are impacting you really have to do with deductions, and Jared's going to hit on a couple of those.
Yeah, the second point we want to make is your state and local tax exemption or deduction is now increased from $10,000 to $40,000, and that phases out at $500,000.
Yeah.
So if you're paying in on state and local taxes, you'll be able to deduct some of those as long as you're not over that exemption.
Another thing that we've been working with a few of you over the past few years is qualified charitable distributions from your IRA. So if you're over 70 and a half, you can make those distributions to a church or charity and not have to pay taxes on them. There's a new deduction that's available that's charitable that you don't have to, that is available if you standard deduct, and that's a $2,000 charitable deduction for a couple. So if you're filing jointly and you're given $1,000 to the church out of your checking, you can now deduct that on your savings, on your taxes, in addition to that standard deduction. The other deduction that is now available that for those over age 65 is an additional $6,000 per taxpayer if you are over 65 years old. So a standard deduction for a single taxpayer is about $15,000. If you're over 65, that deduction is now going to be $21,000. Obviously, if you itemize and it's more than $21,000, you kind of waive that standard deduction to get the higher of the two. But that is another advantage for those who are over age 65 to take advantage of some of that new tax rule. Another thing we want to talk about is the estate tax exemption is going to be at $15 million. It was set to sunset and go down to about $7 million. So for those who have a larger net worth, and net worth is all of your assets that you own, land, buildings, IRA accounts, savings accounts, life insurance proceeds, all of those add to your estate most of the time. And if you're under $15 million, the federal government is not going to tax those when you die. The state of Minnesota is still at a $3 million exemption. So there's still a reason to do some planning, but the federal government is going to stay around $15 million.
There's a few other deductions that you might want to talk to your tax preparer or your accountant on. The big, beautiful bill has some exemptions or some deductions on tips and overtime. We're not going to get into the details today, but that might be something to ask your accountant or whoever's preparing your taxes just to be aware of.
Yeah, so again, if you have any questions, feel free to reach out to us. Hopefully you learned at least one thing that can maybe help you on your taxes and when you file for 2025. We're always here. Shoot us an email, give us a call, and we'll talk to you soon.